Right now, something is happening that is completely rewriting the rules of money as we know it. We're seeing this fascinating, and yes, sometimes pretty tense relationship unfold between the new world of crypto and the old guard of traditional finance. This is a huge shift in how we move money, how we own things, and really, who's in control.
So, what's the real story here? Are these two massive forces becoming friends, working together to build a new kind of financial system? Or are they foes, about to go head-to-head in a battle for the future of money? In this explainer, we're going to dig in and find out.
All right, here's our game plan. First, we'll look at the pretty surprising partnership that's formed between these two worlds. Then, we'll get into what I'm calling the sovereignty standoff, which is the real power struggle going on. After that, we're going to explore what might be the next huge frontier, tokenizing the real world. And finally, we'll piece it all together to see what this new financial system could look like. You ready? Let's go.
Okay, first up, how on earth did these two worlds, which seem like total opposites, get so tangled up with each other? Well, it turns out they're becoming more and more connected, and it really all kicks off with one game-changing innovation.
And that innovation is stablecoins. The easiest way to think about them is as digital dollars that live on the blockchain. So unlike Bitcoin, their value doesn't swing all over the place. They're pegged to something stable, usually the US dollar. And why is that such a big deal? Because they let you send money basically anywhere on the planet in seconds for pennies, totally skipping the slow, expensive, old-school banking system. They are fast becoming the backbone of a new global payment network. And you should know this is not some small niche thing anymore. The absolute titans of finance are getting involved. I'm talking Goldman Sachs, BNY Mellon, BlackRock. They're all exploring this tech. And get this, even the US government is laying the groundwork for it with things like the Genius Act. The establishment is officially climbing aboard.
But the connection goes way deeper than just stablecoins. If you still think Bitcoin is just for tech geeks in their basements, you might be surprised to learn who one of the biggest holders is. It's the US government. Yeah, through asset seizures and other means, they've stacked up around 200,000 Bitcoin.
So yeah, let that sink in. Uncle Sam is a Bitcoin whale. This is no longer some outsider asset. When the US government becomes one of the biggest players in the game, you know the game is fundamentally changed. And they aren't the only ones. Other countries are reportedly looking at it as a potential reserve asset too.
So on one hand, you've got this budding partnership. But, and this is a big but, the explosion of private digital money is creating a massive point of friction. This is where you see a real battle for who gets to control the very definition of money itself. And here's why central banks are getting, well, a little nervous. A government's power is tied to its control over its national currency. But what happens if millions of people start using a private company's digital dollar instead? It could seriously weaken that control. As the quote here says, you can almost think of it as money privatization.
So this has created a showdown between two very different models. On one side, you've got private stablecoins, think USDC, which are issued by companies. Their goal is all about efficiency and building a fast global payment system. On the other side, you have governments creating their own state-backed digital currencies, like China's digital yuan, and their goal is totally different. It's about maintaining control and, for some, pushing back against the power of the US dollar. This is the new economic battleground.
Now, beyond just the fight over currency, there's another revolution quietly brewing. It's called tokenization. And this is the idea of taking real-world stuff, like buildings, art, stocks, and putting them onto a blockchain. This could be the next tectonic shift in finance.
So how does this even work? It's actually a lot simpler than it sounds. First, you just identify a real asset. Let's say a big apartment building. Second, you get it professionally valued, figure out what it's worth. And third, you issue digital tokens on a blockchain, where every single token represents a tiny piece of ownership in that building. All of a sudden, a multi-million-dollar illiquid asset can be sliced up and traded easily by anyone.
And this isn't just theory. It is happening as we speak. You've got Goldman Sachs tokenizing money market funds so they can settle trades instantly. You've got Robinhood using tokens to let people trade stocks 24/7. There are companies that let you buy a tiny share of a rental property or even own a fraction of a famous painting. It's unlocking trillions in value, but it also brings up new challenges around regulation and security that the industry is still trying to figure out.
Okay, so where does this all lead? What does the future look like? What we're witnessing is the slow, piece-by-piece construction of a totally new financial system with new rules, new assets, and a whole new idea of what money even is.
I mean, just look at Bitcoin's own story. It's been pretty incredible. It started out as this weird niche project for cypherpunks, then it evolved into digital gold, a way to protect your wealth from inflation. And now it seems to be entering a third act, becoming a legitimate sovereign reserve asset that big institutions and even countries are buying. It's growing up right in front of us.
And a massive part of that growing up was the approval of Bitcoin ETFs, especially the spot ETFs that just got the green light in the US in 2024. The difference is really simple, but it's critical. A spot ETF, like the one from BlackRock, actually holds real Bitcoin. The older futures ETFs just hold contracts betting on the future price, which can get expensive. The approval of spot ETFs was a watershed moment, basically opening the floodgates for big institutional money to pour in.
And the impact was instant. Get this, a jaw-dropping 6.8% of all the Bitcoin that will ever exist has already been snapped up by these ETFs. Just think about that for a second. That takes a huge chunk of the available supply off the market, which in theory should make it a more stable, less volatile asset over the long run. So as we look to the future, many analysts are pointing to three main pillars that could support Bitcoin's growth. First, more and more institutional buying through these ETFs. Second, the idea of more countries adding it to their national reserves. And third, the continued explosion of stablecoins, which often use Bitcoin as their own reserve asset. If central banks start cutting interest rates, these three forces could create a kind of perfect storm. So, let's step back. What's the bottom line here? First, stablecoins are absolutely changing the way money moves around the world. That's a fact. Second, Bitcoin isn't a toy anymore. It's maturing into a serious asset for serious players. Third, tokenization is unlocking wild new possibilities, but we gotta be smart about the risks. And finally, the big one. The entire financial system as we've known it is being rebuilt, right now, before our very eyes.
Which brings us to our final, and maybe most provocative question. With all these powerful forces coming together, big institutions buying in, a shrinking available supply, and a potential change in the global economy, some are predicting a single Bitcoin could be worth $250,000 in the next big cycle. Is that just hype? Or is it the logical destination for this incredible financial revolution? Well, that's the question everyone's watching now.